Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Hehir, CEO of Trinity Investments, to discuss travel trends and the impact on the hospitality space. Sean, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Good to be here.
You got it. And tell us about the travel trends and the impact on hospitality that you're seeing, particularly with the increase of bleisure, right? Turning work trips into extended vacations.
Correct. So we've seen a tremendous comeback since COVID. Our firm, Trinity, is a full-service hotel asset manager and investor. We primarily invest in high-end hotels in what we call the Smile States, so Florida, Texas, Arizona, California, and Hawaii. All of them are full-service hotel, brand managed. And of course, during COVID, the hotels all had to close. But given that we focus on both leisure, corporate, and group demand, in those markets, we've seen a tremendous comeback. This rise of bleisure, as you mentioned, we've got people working from home Mondays and Fridays. They're extending their weekends. We've seen groups come back. It was very first started off with the revenge travel of the leisure guest. And now we've seen that with the group travelers coming back. Unfortunately, most of our hotels are renovated and well positioned for these travelers coming back.
How have consumer tastes changed?
I'd say one of the biggest changes we've seen with this work from home phenomenon is that every weekend is now a 3-day weekend. Every 4-day weekend is also extended. So what was normally a Thursdays and Sundays were the slower nights in hotels, those are now busier nights. In addition to that, when you saw a lot of workers working from home, stuck behind Zoom calls, for long periods of time during COVID, employee morale was at an all-time low during COVID. We're seeing companies now bringing their people back, having offsites more frequently in these destination-type hotels in the markets that I mentioned. And it's all led to this very strong comeback.
Yeah, it's really interesting. I know that there's a number of conferences that we cover, the larger conferences that actually had to shift months that they're traditionally in a specific convention center or city just because of the high demand that's out there. And anecdotally, I can also say traveling, to and from New York and New Jersey, Penn Station, the busiest nights ever, where you see everyone with suitcases, or Wednesdays and Thursdays nights, where it used to be Fridays were the mad rush out of the city. So we can see it, just how much these patterns have shifted. What about the economic environment and investor sentiment and what is somewhat of an uncertain environment?
So I'd say what's uncertain is the debt environment is pretty tough right now. For the assets that we invest in, we rely on relationship lenders in the markets that we're in, and those assets are performing really well. So there is a disconnect between asset performance on the one hand and the overall sentiment in the investment market and the debt markets. But I'd say when we look across our portfolio, for the most part, we're hitting record months. The prior records were in 2019, and we're hitting record months, month over month. We're seeing what we call compression, which is where you've still got strong demand from the leisure traveler, and you've also got strong demand coming from the group and the corporate travelers now. So that's causing occupancies to rise and room rates to rise. And the final benefit, I'd say, with those types of hotels is that they are a good inflation hedge, because we do have the benefit of leasing up, if you will, on a nightly basis. So we're able to keep pace with where inflation has been. And performance is strong. We just need, some more certainty in the debt markets and the overall financial markets to come back and allow, further investment in this space.
And Sean, what about the labor environment? Because one thing that we've seen during COVID and as we come out of the pandemic, that the services industry really has been hit in terms of being able to attain and retain the appropriate talent needed in the services space.
That has been challenging, and it all comes down to making sure that you're competitive with what the going wage rates are in those specific markets. We did see, when these hotels all closed, a lot of the employees had to go and seek work elsewhere. And now it's making sure that you have competitive packages and wage rates, et cetera, to bring them back. But it is challenging in a lot of the markets.
All right, Sean, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thank you so much. Really appreciate it, Jill.